we always prioritize our users' benefit, like transparency and fairness on top of everything.
Crypto started to be more regulated. It started to be more secure.
95% of what we're doing and we're about to do, we learn from the traditional finance anyway.
Retails are the routes for an exchange, but institutions are the future.
How has the institutional side changed your business models? I know that retail focus will always be part of it. Yeah, what better way to start the day than to dive into the crypto exchange business? Anybody who's been involved in cryptocurrency for the past 10 years has likely purchased assets on a cryptocurrency exchange, on a centralized exchange. It still remains the most trusted way for users to access the market. So really we want to kind of dive into today how that business is looking like, especially in the age of compliance and regulation. It seems like in the exchange business, being first isn't necessarily the best way to go about it because there's a lot of compliance issues. Can you just walk us through some of the compliance headaches or pain points that your exchanges are dealing with on a daily basis, especially if you have global operations? And is that changing now with these positive regulatory developments in the United States and other parts of the world? Maybe we'll start here.
Okay, thank you. Yes, compliance is really a focus for exchange business at this moment. But I think, as you mentioned, the pain point, and for us, we feel that the pain point is like how to navigate the differences between different countries and regions. That's really, we need to pay a lot of effort, like communication, and to really understanding the regulatory framework, like for example in Dubai and in many other countries, many other regions around the globe. So for us, I think how BingX approach the compliance or regulation is that first and foremost, we feel that compliance is like in BingX, it's rather a product that we really need to work on instead of like a tick box, the checkbox we need to tick. And secondly, we take a proactive and positive approach. Once we feel that, okay, here is the form of a new regulatory requirement that we start to communicate with the regulatory bodies proactively, instead of really wait there until the rule like take place, we'd rather to participate in the forming process that can have a positive influence during the process. And internally, we feel that because the regulation compliance landscape are quite vary a lot from country to country, and before we achieve a kind of like unified or very clear regulatory framework, we'd rather feel that it's important to have self-regulation and a high standard of business ethics that we always prioritize our users' benefit, like transparency and fairness on top of everything.
Yeah, Dmitriy?
Okay. Let me provide a short intro about myself first. My name is Dmitriy Sheludko. I'm the CEO and founder of Buyconomy.com. We are a cryptocurrency exchange, top 26 rank right now. I came to crypto in 2010 and came from stock markets. So compliance is a really hard and interesting question for every exchange, I think. Here is where two main different points and two like big points what every exchange facing every year and in any country. It's the speed of regulations in different countries and the processes and stability of compliance regulation in each country, because some countries can be very fast. For example, if we apply a license in Europe or in Asia, it will be two different total results and total speed of result when we will receive this license. For example, if you will take some European country and Singapore as example, or Hong Kong right now. So there is no any unified solution for each country. Right now we are facing the problem that every region, every country need tailored solutions, need some local lawyers, KYC, AML specialists who will help us to onboard and get special licenses, and we will get like some loyalty from the governments of each country and region. So speed is crucial. Sometimes we can get a license even in a couple weeks or months, but sometimes it takes couple years. So of course it slows down our business across different countries. But anyway, we are doing everything. For example, in byeconomy.com, we everything doing by the way, and if we started to apply in some country, we enter in anyway already this country, because it's a lot of work to do before you enter market itself and start to work with customers. Anyway, you start to build basement, you start to do office or hire some people. So this is expansion actually, how we do it. In face of users, just regular users, compliance is crucial right now. Like 5 or 7 years ago, people even don't think, we didn't have in mind what crypto exchange supposed to have any license, or like we supposed to have KYC, and we even don't understand why we need to have KYC, because we don't do it, for example, KYC just we want to, because we're doing it because some countries asking for this data, and we provided it to financial regulation government-based organizations. So before it was super easy to work worldwide, to like distribute our products in any country. Right now it started to be hard, but it's also good because crypto started to be more regulated, it started to be more secure, and it's of course for final customer, for regular user, it's a huge plus because he, as a final result and the final product, he receives the secure, trustworthy exchange, license it, and if something will go wrong, the user always know what, for example, this exchange can be punished, for example, or where the user's money can be in safe place, as in a bank.
Hi, morning everyone. My name is Kevin. I'm the Chief Business Officer of Gate.io, a global crypto exchange you may have heard of already. So we've been around for like 12 years already. So in terms of crypto, it's feel like it's eternity, and it's older than a lot of exchange, maybe older than a lot of crypto influencers as well. And for myself, like I kind of like sounds like a boomer now. Like I've been in traditional finance for like 16 years before I moved to crypto 4 years ago. So to your questions, so the very first premise, when you said it's like first mover advantage is not as important, I don't necessarily agree, first of all. Not necessarily like the first, but like the first bench. The last influx of like major crypto exchange come from the second last cycle in 2017 and 18. We don't see any new major exchange coming in 2021. We don't see it in this cycle. If you said there's like any regulated exchange just breaking in this year, I don't think they're going to make it to top 10. Now, going back to the main question is on the compliance side, what's the main pain point? And again, coming from traditional finance, I don't think that's anything like particularly new or difficult in crypto regulations, because regulators always like try to leverage the existing regulations they already have in place. The main pain point is that the users will only care about compliance when it's actually into their favor. So they don't care about compliance, they don't care, like whenever like their access got locked up or frozen, they're like, oh my God, why are you freezing this? Why are you doing this? Whenever they got hacked and they come to us, it's like, well, you have to freeze all these other users' access because they like stole my money. Then it's like they have a different, agenda behind. So I think, by and large, the industry is more still on like educations, like how we agreed on the level of compliance to different jurisdictions and how we have to act in a way that the users will also expect we act the same way as well.
All right, so firstly, good morning, everyone. Huge round of applause for all of you guys coming early in the morning for a panel discussion. If you guys don't mind sitting at the back, would you guys please, if I can request you come a bit forward? I want to keep this more of a discussion than just me ranting up about things which you guys already know. So one thing, the question that you asked is, being first isn't that necessary at all. It's always about doing it right. And like Kevin said recently, that the end user doesn't care about what the compliances are. It's always the regulators who are pushing it to have it. But at the same time, I do also understand the perspective, because institutions are anybody, they would want security of everyone, including the traditional guys or the retail traders. And as an end user, I think they're mostly chasing pumps. They don't care about what licenses we hold or what we have in terms of regulation. But as an exchange, we always make sure that we are handling the scrutiny very well. So yeah, that's pretty much it.
Well, that's fantastic. So you mentioned the end user. We've seen the end user in crypto evolve quite a bit over the last few years. I think it's one of the first industries where retail or the crypto native folks were first to come in. But now, over the last couple of years, you've seen institutional, you've seen wealth management, you've seen an evolution of the types of people getting involved in the space. So if we're talking about crypto exchange survival, or who's going to survive, let's say the next cycle, how has the institutional side changed your business models? I know that retail focus will always be part of it, but how has your business models evolved to account for the shift in the end user, that being institutional? We've seen the ETFs explode in popularity. We've seen a lot of the ETP products in Europe explode in popularity. So institutions are actually finally here. And I want to know, how has that updated, changed your business models and how you operate?
Well, I actually want to add some points on the previous question, and
Sure.
this is also one of the aspects for this question, is that we're talking about compliance. Actually, I feel the compliance is a process that will build a trust. Why we don't compliance, or why we didn't talk about compliance that much in the past? Because in the past, like 2-3 years ago, crypto is actually very niche, a niche market for like very crazy people, right? But now we are talking about, we want to expand our business. We want to expand our users, getting them from Web 2 space, the traditional financial sector. Then that's why we're talking about like compliance, because we want this market to be big enough to host that variety of funds and that variety of investors that we're talking about compliance. So compliance is not, yes, it hasn't been easy, but to me, it's very positive. I'm quite positive in, like, when I view this process, and I feel this is a necessary step towards, like bigger unified market and big market potential. So coming back to your second question about institutional users or investors, yes, I think that this industry has evolved quite a lot since its early days. Like, for example, BingX, the company was founded in 2018. We firstly start our business by providing very like specific standard feature for crypto native investors. Then our biggest wave of user came from our introduction for copy trading. But now we actually see the market change a lot. We see users from the Southeast Asia, they like meme tokens. And from Korean investors, they like VC tokens, right? They actually like different things. And now we're talking about RWAs. Those things are loved by the TradFi traders or the old money in crypto, right? When the like big money become old money, they start to think about something different, and also for the family office. So we see the market evolves. I think it's not only about like how we customize something or cater something for the new category of investors, but I feel it's like how we connect all the points, like the trading tools, our risk management systems, and all those other like information services, matching engines, everything that we already built, and build them in a more, smarter way, or connect all the dots in a smarter way to facilitate a more sophisticated needs from more sophisticated like investor, as you said, institution clients, because their demand is quite different from the retails. But at the same time, we should maintain the characteristics of the industry. That's the beauty of the industry, right? The very decentralized, transparent, and everything is traceable. So we are finding ways to work for the interest from institution and retail, the old money and new money. That is, I think, one of the, I would say, most challenging thing, but at the same time, interesting and exciting things happening in crypto exchange space.
Absolutely. Yeah, anyone else? Go ahead.
Yeah, thanks for this question. Very interesting and very visionary thing. Where crypto itself and crypto market itself started with retail investors. So we started with hype from ordinary people who started to buy and sell, participate in scams, things like this. So this was a leading crypto market to the billions. But right now it's a new era and a new generation of crypto market. And crypto market with institutional investors will go to trillions, many trillions dollars capitalization. Because we all understand what it's a huge players who are ready to jump in from the stock markets, and the beginning of ETF is a huge and very nice sign for the whole crypto market. What these huge changes started to become real. Again, we can't even imagine 5 years ago what it will be happen, and Bitcoin will jump up to $100,000, and Bitcoin ETF will be real, and all financial worldwide institutions will support it. So right now it's a reality, and we live in it. We live it inside of it, and of course, right now as a crypto exchanges, we need to react. Some hackers probably. Yeah, so we need to react on this. Of course, we need to upgrade ourselves, and it's goes to like a question before for compliance, because if we want to see institutional investors on board on ordinary crypto exchanges, of course we need to be hard regulated as stock markets. Of course, we need to be trustworthy to the government bodies and government economies in many leading worldwide countries who has a stock market exchanges. So this is the point of improvement, and of course we are ready to do it, because we understand without institutional money, without institutional investors, we will not survive like in the next 5 years. Because the leading exchanges who right now on board, the leading funds and top players who trade Bitcoin on ETF, for example, they will lead the next 5-10 years in crypto industry. And we should understand also one thing. Bitcoin ETF right now, it's just a cover, and the core is crypto market itself and crypto itself. Bitcoin itself is a original tool and original instrument to work with and to trade with. But right now, where institutionals and stock markets, we just created cover with safe environment for the leading funds and institutional investors. So our goal for the future is to make the same safe environment for institutional investors inside of our crypto exchanges. So it will be not necessary for them to trade Bitcoin, Ethereum, ETF, doesn't matter. They can jump straight on our exchanges. They can straight buy Bitcoin, buy any asset, and hold and use it as store of value or pensions, doesn't matter. So this is the vision, and this is the goal for the next 5 years at least.
Fantastic, yeah.
Okay, so I guess I have a responsibility to make things a little bit spicier on like an early morning. So first of all, I don't necessarily agree with Vivien. It's like regulations is not about building trust. I think it's actually the opposite. Regulations is about like you don't actually have to trust the exchange anymore. You don't have to do this trust me bro thing. You just have to trust the regulators that will come arrest me if I do anything wrong, right? So it's removed the trust elements in the process of operations in a good way, in a good way. The second thing is ETF is good as a product, as an example for institutional adoptions, but not a good use case because when investors going into ETF, that means they want to like remove themselves from all the like counterparty risk facing a native exchange, remove all the custody risk with like holding the actual the spot asset, the underlying asset. So, but don't get me wrong, I like the concept of ETFs. Again, I'm coming from traditional finance. I think we're still at the very beginning phase of like seeing better ETF, more sophisticated basket ETFs, index ETFs, there's more to come. Currently, all the ETFs is VADA, Renina, and like single underlying is pretty boring. But speaking of boring, I think the compliance side and institutional adoptions, when are we going to the next phase and where are we going to do differently, will be where we see things getting really boring. We will talk about like things that even on like in token, you were like, no, we're not going to have panels on those things like SOT 2 or like best execution, KYC and AMLs. Those are the things that we work like quite relentlessly behind the scenes, but like we don't go out to Twitter and tweet about it. This is like not getting any like interaction, not any likes, but that's a necessary devils that we have to deal with behind the scenes. So I'll leave it there because like that's I don't want people falling asleep like 10 in the morning. So but that's important. We have to do, but we don't talk about them enough on the stage.
All right. So as Kevin said that the most interesting thing would for an exchange would be to do all the boring things. I strongly believe that. Because I understand that institutions or regulators are looking for the same thing. They want things to be boring because the moment everything gets exciting, the retail lose a lot of money. We see, I mean, as an exchange, we have seen that it's always a marriage of institutions and retail trader. Retail traders are, of course, chasing the pumps. They want to double their money like almost immediately. But institutions are the ones they are looking for ETFs or such products which essentially sustain their long-term growth. 5 years down the line, I see that ETFs are going to be a big thing. It could be just a single ETF for, let's say, Bitcoin or Ethereum, or it could be a portfolio of like or a basket of 10 top 10 crypto. So these are the things which essentially we have in back of our mind as well. And always when we sit at the table and discuss about the strategies, we always look at where momentum will be in like 5 years down the line. It could be retail focus, it could be institution focus. One of our team member actually said this, and I quote, so retails are the routes for an exchange, but institutions are the future. So we are always looking out for that. We are always trying to figure out what best products we can develop and put there out in the market.
Well, that's a really good way to put it, institutions of the future. And I know it's very difficult to predict where the industry is going to go in 5 years. I mean, you talked about the last cycle. It seems like forever ago. 2021, 2022, we had what is it, about a dozen high-profile blow-ups in the industry. Some of the most trusted names went out the window. But kind of projecting out 5 years from now, how do you expect the exchange business to evolve? Will it become more like brokerage services on the traditional side, or will it retain its own kind of unique crypto angle? Just kind of want to get your sense on how you think the business will evolve moving forward. Anyone can start.
I think I'm gonna just like take it forward. So exactly, like I said initially, that it's a marriage of retail plus institutions. And like for example, less than I think close to 10 years ago, the definition of crypto was something which was discussed in US. So there was no clear definition of what essentially crypto is. 10 years down the line, we evolved a lot that there are clear regulation, clear ideas or clear rules about what crypto is, what we've been doing. 5 years down the line, I think it will be both. We're going to be retail focused, whereas in we'll still be chasing memes because inherently everybody in crypto is a gambler. But at the same time, it would be a marriage of both. So we will also be having ETFs. So for example, like a few years back when I started my crypto journey, not a few years back, a bit more, I think I started with stocks. And me as a guy who was staying in India, I wanted to invest in Tesla, which when it was like less than few $100. So I wanted to do that, but there was no brokerage firm that I can trust or even, and it was very difficult to just open up the accounts because the brokers are the ones who are holding the assets, and I was not the one who was in charge. So if they run, I'm screwed essentially. But 5 years down the line, what I see is anybody from any part of the world, we would be essentially tokenizing the stocks. So let's say anyone can buy a share of Tesla, anyone can buy a share of a painting made by Picasso. So this is what essentially we look at 5 years down the line, and we're going to be inherently a platform which is focused on all the things combined. One-stop shop.
Absolutely.
Okay, so I guess, again, if it play into my favor, obviously I hope that in 5 years' time it's become more like traditional finance and, you know, a traditional brokerage. But like my general feeling is maybe like 95% of what we're doing and we're about to do, we learn from the traditional finance anyway, with like maybe 3 major exceptions. Like first is the staking, second is perpetual swap, thanks to Arthur Hayes. And third is the Web3 like wallets where you have a centralized exchange, but also bundle it into the decentralized world as well. So I think even with that regard, I think like 95% is like we're still going in the pathway where traditional financial instruments and concept will prevail. Now, I think the more interesting question is what we have today that we think in the crypto world is acceptable, and in 5 years' time, it is not anymore because of like how the industry evolved, right? Are we going to have like exchange also acting as like prop trading and market maker or like alpha shilling, or people are like having like free license to just shield the coins and insider trading on Twitter and pump the shit. I don't want to name names, but like they're pretty big names out there, probably the biggest names in the world right now is just like shielding their own coins. So these are the things that is not possible in traditional finance, but it is possible right now. So are we still going to see it in 5 years? I think that's more interesting.
Okay, yeah, let's do it this way. Let me give one real example. For example, if you want to BlackRock fund to join Buyconomy.com tomorrow and start to trade Bitcoin straight on our market, how it will be organized and what will be the final final things what will touch final user. So for example, if you want to see this tomorrow, we need to be super hard regulated. We need to be super transparent exchange for the American government. We need to have like bunch of licenses. we need to check us like our last 5 years operations. And if just regular user want to trade together with institutionals on one side, we should provide at least much more adopted and much more regulated KYC. So users should be ready to provide proof of funds. Users should be ready to provide some bank statements, and all money incomes and outcomes should be transparent for us. Because if you want to work with institutionals, we should be super transparent for them and for final user. So of course, tomorrow it's not possible to make so. And we are not ready, not any exchange ready actually on the market right now to make so. But we should understand, as soon as we implement this, as soon as we be ready to get institutionals on the board, the more money will come to crypto market. And it will be a super huge money. So I think leading exchanges right now should be in hurry mode to like be more regulated, be more to have more trustworthy business, and be like reliable to apply for institutional investors. So because in future it will be a hybrid system, and I think it will be like 60 or 70 to 40, 30. So 70% should be institutional part on the trading volume and like participation in crypto trading, and 30, 40 will be just regular users. So like in 3-5 years, we will see the first signs of this movement, and of course we should be prepared and ready right now, today, and like react immediately, because big money will not wait for us. We will find out new solutions, we will find out new ways to store their value, to make more income. Right now we see economic instability because of some famous president in North America. So this affects the markets, and we see some funds were making huge money on it. So we take this money from our people. So we can play these games forever and manipulate markets. But if we not participate in it, and if we don't have the straight way of money to the crypto, we will lose.
Well, if we're talking about a time span about like 3 to 5 years, I think our industry will continue to evolve in a form that's more complex than traditional financial brokerage. I don't know, like if we take it longer, whether we will become like everything spin off. But currently, I think 3 to 5 years, that's, will not be there yet. Okay, think about how the exchange business operates now. We are a combination of brokerage, some asset management, and information services, treasury, custodian. We're a combination of a lot different form of business model, and also business lines. So I think if we're talking about easy regulation, then that's okay. You spin off everything, right? Spin off the business lines, and you regulate. The regulator regulates the subsectors one by one. That's the easier part. But from a crypto native perspective, I really hope that regulation can be more sophisticated, can be more holistic, instead of we bring everything what's happening in traditional finance to just push into crypto industry. This really reminds me about the period before Valkyrie, when I was a trader at Wall Street. I think the regulation, in one hand, the good thing is to bring the. I actually agree with Kevin that compliance is not about we build trust, but about the industry build trust to attract more users, to attract more outsider. I think this is positive part, but I would say a little bit negative part is when things are regulated in a very tiny framework. To some extent, the innovation, the trading firm and the services we provided, you will have a lot of burdens overlay to regulate it. So again, from 3 to 5 years, I would not see we will be there. but definitely we like bring the experience, like taking into consideration the experience what happening in traditional finance. I think the thing might be in there maybe in like more longer time frame, like 10 years. So I think this is still the period that we can have much innovation as we could to develop industry, and this is the fantastic time to see like traditional financial investors and also crypto native investors.
Absolutely, and this marriage of institutions and crypto, I think, is really taking off through real-world assets and tokenization. There's a lot of debate now in crypto whether we're in a bear market or not. I don't think we are, but one sector that's definitely not in a bear market is real-world assets. Excluding stable coins, we've seen another 8% rise over the last 30 days. We're looking at around $21 billion in tokenized RWAs right now, excluding stable coins, and that market seems to be growing exponentially. So how do you think RWAs are going to change or disrupt the exchange business? Are tokenized assets something that you think that your exchanges or exchanges in general are going to be incorporating more of moving forward? And do you see demand on the institutional side for tokenized assets? Anyone want to start?
I think this is an extension to the question that I answered previously. So as I explained that 5 years back, I was not able to invest in US stock being in India because it was very difficult. But RWA is something which essentially is going to solve that issue, not just for me, but for everyone out in the world. Crypto landscape has been evolving for like a really long time. And RWAs, we have seen that is essentially solving problems which are generally for a generation above us. So, for example, my parents, they would rather want to invest. They would rather want to invest in real estate than going into Bitcoin. It took me years to make them convinced that okay, Bitcoin is better investment than real estate, but still they'd rather have that. For users who, for retail who doesn't have that sort of capital, which would want to buy a property, let's say, for example, in Dubai, they would rather have part ownership in the property via RWA. And as an exchange, we want to make sure that we are that one shop which essentially facilitated it. So there could be projects from the Mark, from the Nube, from Imar, and they could be tokenized, and people sitting in Nigeria, people sitting in China, people sitting in India would be able to have part ownership in the property itself, which essentially will empower the retail because they're getting a piece of the pie, but at the same time would be easy for even bigger players to jump on board. And this is just one part of it. I think last month I was in a panel where we were discussing about RWA of the, tokenizing sapphires. So sapphire as an investment is pretty good. I mean, diamonds were sort of made us believe that they are very potent or they're very I think valuable, but I think sapphires instead are much better investment. And for us, this is just an example, by the way. I'm not preaching about them, but I think we could essentially make multiple products revolving around that. It could be real estate, it could be sapphires, it could be something else. We can tokenize anything. But of course, not everything needs to be tokenized. And we as an exchange will make sure that they are both compliant and being taken care of.
Okay, so first of all, I absolutely hate it when whoever working in the RWA world saying that it is a $3 gazillion values market. We're not going to count everything in real world as asset that we can tokenize. It only makes sense when we tokenize something with a business use case, which is still a pretty big market. So for people here, like if we're trading crypto, we charge like 5 basis points. Like buying properties, I don't know in Dubai, right? In my country, 1%, okay? In whiskeys or luxury watches, they're charging like 30% commissions. And if you're into like painting, like actual painting with Christie's and Sotheby's, they charge up to 100% commissions. We all in the wrong business, right? But that's make it a very good use case for crypto because it makes things more transparent, it makes things more decentralized than just like two auction house. So I think that makes sense. But then going back to your question is like what as an exchange would have to do more. I think that's very little, right? Because like we're not looking at the actual underlying. We will never be like really specialized, being the expert in custody of fine arts or wine. We're still like the best in custodying the tokens. So what we can do the best is to work with people who do in our space and make sure we have a streamlined end-to-end solutions with like tradings and settlements and also the custody, which should be like probably further apart from like what we do here right now.
Yeah.
Super good question. Because tokenization is a real good case for the crypto, and it's kind of blue ocean for the crypto. We all dreaming about tokenization. We want to tokenize everything, even with water. So I remember this wave of tokenization started like in 2016, 17, 18. During like last wave of hype around Bitcoin and crypto, and where was a lot of dreamers and companies who started to say we will tokenize everything, real estate, car business, doesn't matter. But during that time, it was a lot of empty companies, and all those things was just ideas. So we still stand on this level right now on tokenization market. Nothing moved too much. And if you want to see the good cases and real implementations, we, of course, again, all goes around the big players, institutionals. So, for example, if MR company in Dubai will support tokenization and start to sell their real estate for Bitcoins or any crypto, it will be a real huge case. And of course, any exchange will be super glad to support it. So, of course, we need, the main problem in 2017 was the problem of adoption and connection between crypto and real business, because the real business not ready and don't want to jump into something new, because they have really established models for hundreds of years. They have their own evolution wave, and we just crypto enthusiasts came to them and say, wow, I will tokenize your house and sell it for Bitcoins. Of course, if I don't understand anything about it, I will say, thanks, but I'm good. I will take my dirhams or dollars and will be happy with it. So, it's a matter of a readiness of a business. It's a matter of a readiness of buyers and sellers on these markets, on this market of tokenization. And most important, it's a readiness of big players to participate in it. And from a crypto exchange point of view, we as Bioeconomy, of course, are ready to support it. Of course, again, it's a question of regulation, because, for example, if you want to sell tokenized real estate on our exchange, again, we need to have some compliance level for this. Again, we need to have some regulations. For example, if you listed tokenized asset in real estate from Dubai, we need to have compliance with Dubai real estate agencies and governments. So, but we always ready to do it, because we are really open for something new, for good cases. We like working on this market not just to watch. We are working on this market to create this future and implement such cases to make crypto more popular in the real business and daily usage. So I think tokenization is still a dream. Nice and like shiny, but we're just waiting for the good case. I think maybe in next couple years it can happen, because with like more crypto adoption and even with ETFs, even if United States stated what way will make crypto and Bitcoin as a Federal Reserve currency, maybe not maybe, but for sure, these cases and this acceptance of crypto is a good sign for the big players and for the business to start sell property for the crypto. Why not?
Okay, I'll take it short. Tokenization remind me another concept in traditional finance called securitization. So, like, as someone came from the traditional financial background, I actually feel very excited about what the development currently in the market in the RWA space. I think entire crypto exchange, entire crypto industry are talking about a killer app. So here we see the killer app, except trading, right? Trading is one of the killer app. And second killer app, I would say how the crypto industry or all those applications, the technologies, infrastructures can relate to a real world, real application. That's how and where we can build a killer app. So TradeFi TradeFi recently and RWA recently are two major, I think, most promising sector that we can see killer app come from. But as the previous guest said, talking about we need to figure out what kind of asset can be tokenized. So it's run down to the question that who need RWA, right? Now we say RWA, they wrap wrap T-bills, the treasury bills, into a RWA product, providing 4% per year. So who will buy 4% per year using cryptocurrency, right? This is one question. Another question is that a lot of my trading friends from crypto asset management, they made a lot of money. Now they're coming to me and say, hey, I want to buy a property. So I say, okay, this is high rewarding industry. Why you still want to buy a property, right? The answer is because new money become the old money. Old money always seeks something they are familiar, they can use in everyday life. They can understand the business model. So I think this is one of the interesting trends that I've observed in the industry. And how exchange can work with this trend. At BingX, we also do investment. We invest in a few very interesting projects. One is to do the tokenization or crypto version of securitization of properties, which can provide constant cash flow. So from my perspective, a good trend is that we can gradually use a more sustainable way of evaluation to value something happening in crypto industry. And I think this is also a very good opportunity to really promote the industry or promote crypto technology and application to a wide range of audience.
It's going to be an exciting few years, that's for sure. That's all the time we have. Thank you, everyone. Appreciate it.
Thank you.
Thanks.